Good morning to all traders and welcome to this today's market insights video on FX majors. Today is the 3rd of March. I'm going to talk about euro dollar mainly and also the pound dollar. Euro seems to be strengthening. That is because dollar is weakening. It has been weakening over the past few days because there is now talks that the Fed is going to act sooner than everybody expected. And that is because, of course, of fears of the coronavirus spilling over and affecting economic activity. And that has been the case. Australia cut overnight as well. Now, today, later, there is an emergency conference call between central bankers and finance ministers. They're going to talk about how they can probably fight the effects of the coronavirus. And also on the plate, there is the idea of a collective rate cut. Okay, this is going to affect the markets massively. Now, on euro dollar, we've seen this incredible move to the upside over the past few days, and that made me actually look at this long-term pattern with a different eye, okay? So because we didn't get a 5 move to the downside, that means that we are in a complex correction rather than anything else, okay? Which means to suggest that this is an ABC for a W, this is a W, X, and Y for X, and most likely going to see another ABC for wave Y. This is the most likely scenario that, of course, could play in or could not, and that would, of course, depend on further signs that we're going to get over the next few following days or following weeks, right? Now, I still see this as an ABC, this move over here, right? As a running flat. Now, the thing is, from here and onwards, okay, I see this as a W, X, and Y that completed the wave X. This is just a zigzag pretty much, right? And now, since this is an ABC, I'm expecting this to be an ABC as well, right? So what this means, one second. What this means is that since we've got the first, the second, the third, and the fifth, we're going to see an ABC correction, okay? That will be the A, that will be the B, and we're going to get another wave up to complete wave C, okay? Now, the moment we take this level out, and we could actually be anywhere between above 112.40, okay, anywhere that in that area, then we should be really looking for prices to move lower. But this is medium term, right? In the short term, I also see a correction coming into play, right? If this correction usually goes down to 50% of this move, and that would take us down to below 110 potentially, okay? Unless if, of course, bulls decide to start pushing prices up from a higher point. That would suggest that the wave C is going to, actually wave X is going to be completed sooner than expected, okay? Now, you may ask, why do you think euro is going to go down in the medium term? Well, this is because of this pattern. However, and I see this as well being the case, that's the second scenario, we could have this wave over here, okay? We'll have ABC, ABC, and ABC, right? This could be the end of wave Y over here. And why I say this? Because simply speaking, this could be wave X over here, okay? And if that was X over here, that means that up here, we would have wave Y, okay? And if wave Y was here, that means that wave X would be here as well. We've had wave Y already in the primary degree, this one, right? And now we're moving up impulsively. So in case this is the scenario that we need to look at with more likelihood, right, then we're looking to break above the 112.50, and then we're looking to break above the 114, right, and then we're looking to break above the 115.68, okay? We're most likely looking, of course, at the trend reversal. So the next point to look at will be the 112.50, okay? But in the short term, this should correct whether this is going to be an ABC or 1, 2, 3, 4, and 5. Now on pound quickly, pound actually moved exactly as we expected. I still see this as 1, 2, 3, 4, and 5 because we are still trading above the 125.80, okay? We talked about this being an ABC potentially, right? So we've had ABC, we've had a nice triangle over here, and then a W, X, and Y. Now this Y suggests what? That we're going to see 1, 2, 3, 4, and potentially another move to the downside. We can literally go to 125.88 or so. This is a 100 Fibonacci extension of waves A and B, as well as the previous top. That makes a very good confluence level, right? And it would also suggest that we can have potentially a nice triangle pattern over here, because we'll have 1, 2, 3, 4, and we could get another move to the downside after a short correction to take the, let's say, 128 or so out. But ideally for this to happen, we want to see prices remaining below 128.50. So this is all for the day. Pay attention to what's going on with this conference call today, because it's going to be very, very important to how markets are going to perform from here on.